a lot of different fun new things. It's one of the greatest places in the world to raise your family and raise your kids. It's not limiting of your opportunity. That's the best way to describe it, I guess.
That's a collection of voices from an open streets event in the Tompkinsville neighborhood of Staten Island. The next stop for WNYC's Community Partnerships Desk and Street Lab is Brownsville, Brooklyn. Look for us, weather permitting, Saturday, May 6th at Zion Triangle Plaza at the corner of East New York and Pitkin Avenues.
WNYC supporters include the Museum of Arts and Design, now on view Generation Paper, a fashion phenom of the 1960s, featuring garments from mini dresses to string bikinis, designed to promote innovations in paper materials. Tickets at madmuseum.org.
It's WNYC. Marketplace Morning Report is coming up next, and then in 10 minutes at 9 o'clock, it's the BBC News Hour on 93.9 FM. Let's check in with London to see what they're working on. London, good morning.
Good morning, WNYC. I'm James Menendez. Today on NewsHour, we'll look at diplomatic efforts to extend the ceasefire in Sudan and the involvement of South Sudan with its own recent history of civil war. Also, Turkey's president cancels another day of election campaigning after he fell ill live on TV. That's BBC NewsHour at 9 on 93.9 FM, WNYC.
.52 and overcast out there. Chance of early afternoon showers on this Thursday. Mostly cloudy and 62 for a high. Chilly in the city, down in the 40s overnight. Tomorrow, slim chance of afternoon showers. Mostly cloudy and 63. This weekend is going to be a wet one. If you got a smell, if you have some outdoor plans, you may have to change them. Saturday, rain. Sunday, rain as well. It's 8:51 and it's 52 degrees.
Somebody has tapped the brakes on the U.S. economy, and I think I know who.
Marketplace Morning Report is supported by Progressive. Progressive Commercial Insurance protects small businesses with customizable coverage options as unique as your business. More at progressivecommercial.com. And by Otter.ai. Otter's AI meeting assistant automatically takes live meeting notes, captures slides, generates summaries, and assigns action items. More at Otter.ai.
I'm David Brancaccio in New York. There's news just now that the American economy grew by much less than expected in the first 3 months of this year. Gross domestic product came in at an annual rate of 1.1%, almost half the typical expert forecast. The growth was much slower than the 2.6% growth we'd seen at the end of last year. Now, this may not be enough, slowing down to keep the next interest rate hike at bay, but it is a sign the Fed's campaign to fight inflation is beginning to bite deeper. It also feeds into the narrative that a recession might be in the offing later this year. Markets, Dow and S&P futures are both up 0.5%. NASDAQ futures are up 0.9%. Some of the bounces coming from Facebook Meta, which reported its sales have started growing again. The stock is up 13% in pre-market trading. We're keeping an eye on First Republic, a medium-sized bank that customers have been leaving even though deposits are insured up to $250,000. Earlier this week, the bank posted its quarterly results, which did not improve the bank's standing. Marketplace's Nova Safo has more.
Quarterly results earlier this week, the bank said depositors took out $100 billion last month. It was able to pay out those deposits, but at huge cost, taking out expensive loans and getting a $30 billion cash injection from major banks. Were all of those efforts enough, or did they simply delay the inevitable collapse? So far, government regulators have been reluctant to step in. Rescuing First Republic would mean shoveling billions of dollars over to big banks, the ones who put together the cash rescue. That's a tough sell in an environment where even the earlier bank rescues have faced some criticism. Meanwhile, First Republic's executives say the bank will cut costs and sell assets. But who will buy those assets? Things such as mortgage-backed loans made when interest rates were at rock bottom. So far, there's no obvious answer and no obvious path forward for First Republic. I'm Nova Safo for Marketplace.
First Republic stock is up 1% in pre-market trading now, but it's down 65% from a peak earlier this week. Now, First Republic's a medium-sized bank, but let's turn to the big banks and the fight against climate change. The big dogs reported banner profits January to March, a period that includes many depositors moving money out of smaller banks into bigger ones, as we just said. Is there a chance these higher profits might encourage banks to make good on climate promises? As two recent studies show, the biggest banks are still not doing enough to meet the goals of the Paris Climate Agreement. Ali Budner reports.
Banks themselves don't emit exorbitant amounts of greenhouse gas, but they play a big role in financing industries that do, like fossil fuel companies. And banks are under pressure to set climate goals. A new report from the nonprofit Ceres looks at the largest U.S. banks and how they plan to help reduce emissions from oil and gas by 2030. Co-author Blair Bateson says the biggest banks have work to do.
None of the 6 banks' targets for 2030 put us on the pathway for this global goal that we need to achieve.
The goal is preventing more than 1.5 degrees Celsius of warming. Bateson says banks aren't necessarily on the wrong path,
just that they need to go further and faster.
Since the Paris Agreement was into effect in 2016, banks have poured $5.5 trillion into fossil fuel companies.
Shauna Foster is with the nonprofit Rainforest Action Network, which collaborated on a recent annual study looking at the world's 60 leading banks and their relationships with over 2,000 fossil fuel companies.
Banks at first were like, well, we have nothing to do with this. We're just neutral servicers of the economy and, whatever the market wants, that's what we finance.
But now she says bank leaders are responding to pressure from shareholders and customers, even if they're slow to make meaningful change. Galina Hale is an economics professor at the University of California, Santa Cruz. She says that for the bigger banks reporting strong profits right now,
it might be easier for their boards to approve changes towards more sustainability.
But Hale says banks really shouldn't need soaring profits to act on climate goals if they see those actions not as a sacrifice, but rather as a bulwark against future loss. She says if banks overinvest in fossil fuels,
then they're going to suffer consequences in terms of profitability later on.
Some banks, like Citi, say their 2050 emissions reduction targets for their most carbon-intensive sectors do align with the 1.5 degree climate scenario. Val Smith is Citi's chief sustainability officer.
So far, we have developed targets for our energy portfolio, power, automotive manufacturing, commercial real estate, steel, and thermal coal mining.
Smith says the pressure for that has come from investors, their own employees, and even some fossil fuel companies who want to green their portfolios for their own bottom line. I'm Ali Budner for Marketplace.
Marketplace Morning Report is supported by SoFi. SoFi Insights helps members track all of their money all in one place. SoFi Insights provides credit score monitoring, spending breakdowns, financial insights, and more. Learn more at SoFi.com, SoFi.com. Get your money right. And by Amazon Business, helping provide a smarter, easier way to get the supplies businesses need to thrive. Amazon Business, your partner for smart business buying.
In the face of international sanctions following its war on Ukraine, Russia has gotten more creative, finding buyers for its oil products. This means some oil has to travel further to those customers who are ignoring sanctions. Longer hauls mean more demand for tankers, which drives up the price for everyone else. Marketplace's Lily Jamali reports.
Demand for tanker services has surged as sanctions have forced Russia to sell a whole lot less oil to Europe and more to other parts of the world, says Nicholas Watt, head of freight pricing at Argus Media.
That flow is now largely going to India or to China, so that's a longer haul route that will tie up more tanker tonnage.
All that tied up tonnage means it's more expensive for producers around the world to hire tankers that move fuel and petroleum products around the world. The average cost has more than doubled over the last 2 months. And experts say we can't count on a lot of new tankers to ease the crunch. I'm Lily Jamali for Marketplace.
And in New York, I'm David Brancaccio. It's the Marketplace Morning Report. May PM, American Public Media.